This is a demonstration of problem 635B, accounting principles for inventory and applying the lower of cost or market rule. Some of L&K Electronics merchandise is gathering dust. It is now December 31st, 2018, and the current replacement cost of the ending merchandise inventory is $32,000 below the business's cost of the goods, which was $98,000. Before any adjustments, at the end of the period, the company's cost of goods sold account has a balance of $410,000. In Part 1, it states journalize any required entries. So since the current replacement cost of the merchandise inventory is now $32,000 below the business's cost, under the lower of cost or market rule, we need to reduce the value of the merchandise inventory down to its current replacement cost. To do this, we're going to debit cost of goods sold for $32,000, and we're going to credit merchandise inventory for the same amount. The second part of the problem says, at what amount should the company report merchandise inventory at the balance sheet date? The original cost of the merchandise inventory was $98,000. However, after we post the entry that we made in Part 1, it will reduce the value of the inventory by $32,000, and we will report it in the balance sheet at its market value or current replacement cost of $66,000. The third part says, at what amount should the company report cost of goods sold on the income statement? The original cost of goods sold that we were given in the problem is $410,000. After we post the entry in Part 1, that will increase cost of goods sold by $32,000, the amount that the inventory has decreased in value. So the new cost of goods sold that will be reported in the income statement is $442,000. Part 4 states which accounting principle or concept is most relevant to this situation. That would be the conservatism principle that states that we should report the inventory at the lower of cost or market in the balance sheet. And that is the conclusion of the demonstration for problem 635B.